In July, most of the market reaches all-time high, and then there was this first 3 days in August. We saw a global meltdown because Bank of Japan hikes interest rate by 25 basis points, but very shortly all of them recover as well. And only Dow Jones, it has broken above its July high, but not for the rest. And it seems to me the AI or the tech stocks in Nasdaq is losing some shine here compared to the traditional stocks in Dow Jones. And we're going to find out what are the sectors investors are gearing towards this time and why they favor Dow Jones over Nasdaq for this season. My name is Con Hao. My work at this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. Before we get into the subject, please do take some time to read into the disclaimer. And I'm going to do a comparison of the top 10 components between Dow Jones and Nasdaq, and the intent is to find out what are the sectors that investors are looking at this time around, the traditional stocks. And I've prepared this table, and this is comparison of the top 10 components in terms of their market cap between Dow Jones and Nasdaq. And what you can find in the sector in Nasdaq, most of them is available in Dow Jones, except for finance, commercial services, health technology, and consumer durables. You're not finding them in Nasdaq here. And we're going to see the reaction over the past few weeks, the first 3 days of the global meltdown of this sector, which is represented by JP Morgan Chase, Visa, United Health, and Procter & Gamble, and see how much it recovered. And let's look at the JP Morgan Chase, the 3 days meltdown, and it recovered very strongly, and this was the all-time high for JP Morgan Chase. And Visa, 3 days meltdown, and then it recovered so strongly, about to break its all-time high. That is in March. And for United Health, and this was a 3 days global meltdown, and this was their all-time high as well. And Procter & Gamble, I find is really interesting here is that 3 days meltdown, it go opposite the trend. It went up instead. And this was also the all-time high for them. And to me, it seems to me it is clear that traders and investors are turning their attention to all these traditional stocks. And I believe that they're also seeing what I'm seeing here is that they find that the AI stock seems to be a bit overvalued. And we're also concerned that how about economy for the rest of the year? It seems to be going to be slower. And it's always good to take a step back. And I'm going to demonstrate to you how I plan my trade over the past few weeks, where I shared the sentiment of many investors here, where I want to go back to Dow Jones. And of course, Nasdaq is still great to trade, but I think Dow Jones is going to give me a better mileage of the related stock in Dow Jones. And generally what I do as usual is that I like to look at trend line, and this is the uptrend line I've drawn, and you can refer to my past videos how I draw the trend line and how to qualify that this is a standard trend line is that usually I like to clone this, and I want to see a relationship that it kind of mirror this trend line, and this was good that you can see here. So what I'm trying to demonstrate here is that Dow Jones is still uptrend, and basically I believe on this daily chart perspective is going to range bound along this trend. So basically in short, if I'm still bullish, I'll be looking for every opportunity to buy into dips. Avoid chasing after any euphoria, but follow where the fund flow is, which is in the traditional stocks. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave me any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.